event in May 2024, which explored the future of AI and corporate governance for companies, demonstrated the importance of adapting to technological advancements in legal practice. Today, we shift our focus to taxation, a subject that affects businesses, legal professionals, and policymakers alike. The Nigeria Tax Bill 2024 introduces significant reforms with far reaching implications for businesses and the legal profession. As lawyers and business people, it's imperative that we remain at the forefront of these discussions, equipping ourselves with the knowledge and strategies required to guide our clients and organizations effectively. I encourage us all to actively participate, ask questions, leverage this session to expand your understanding of the evolving tax landscape. I also invite us to become active members of the MBA Ikeja Business Forum, where you can continue to engage in meaningful conversations, network with industry leaders, and contribute to shaping legal and business practices in Nigeria. Once again, I welcome you and we look forward to a fruitful session. Now, of course, it's my pleasure to welcome the esteemed branch chairman for his remarks. Mr. Chairman, sir, you're welcome.
Thank you, Acting Chairman of the Business Forums, distinguished speakers, the Acting Chairman of the Business Forum, honorable members, senior advocates of Nigeria here present, learned seniors and colleagues, esteemed and participants. It's an honor to address you today at this crucial webinar, Nigerian Tax Bill 2024, Strategic Insights for Business Leaders and Legal Advisors. I commend the MBA Ikeja Business Forum for organizing this event, which underscores the role of the Nigerian Bar Association in capacity building and professional development for legal practitioners. The MBA has always been at the forefront of ensuring that lawyers are well equipped with the necessary skills and knowledge to thrive in an evolving legal landscape. One of our key mandates, going by our constitution, is to uphold professional standards, foster continuous legal education, and create avenues for the collaboration across the legal profession. This webinar is a testament to that commitment, providing an opportunity for legal professionals to engage with industry experts on a subject that impacts business and regulatory compliance. As we navigate the complexities of taxation and its implication on businesses, it is essential that we, as legal practitioners, maintain high professional standards in advisory and compliance services. The ability to interpret legislative changes and offer strategic counsel to clients is a skill that sets us apart and ensures the continued relevance of our profession in the contemporary world. Furthermore, collaboration within the legal community is more critical than ever. The intersection of law and business necessitates that we build stronger networks, share knowledge, and support one another in tackling legal and regulatory challenges. Platforms like these, the MBA Ikeja Business Forum, provide a space where such collaborations can flourish, enhance our collective expertise, and influence policy discussions. Understanding the proposed changes is important for evaluating their possible consequences on individual taxpayers and the broader economy. It is particularly important to explore some of the key changes in the proposed tax reform bills. For example, the personal income tax and its potential implications for individual taxpayers. I encourage all members of MBA Ikeja branch to actively participate in this forum, contribute to its growth, and take advantage of the wealth of knowledge it offers. By working together, we can ensure that the legal profession remains at the heart of business and economic development in Nigeria. I look forward to an engaging and enlightening session. Thank you all for participating and attending and participating.
Thank you so much, Mr. Chairman, sir. We appreciate your remarks, and as you've instructed and advised, we will ensure that we are fully participating with this session and with the business forum. Now we're going to introduce Dr. Ihoma K. Ilobinson. She's a lecturer at the Department of Commercial and Industrial Law, Faculty of Law, University of Lagos. She teaches corporate and business law courses to undergraduate and postgraduate students. She has published extensively in reputable journals and delivered papers at several learning conferences. Dr. Elobinso is an active member of the Nigeria Bar Association, the Nigerian Association of Law Teachers, NALT, and the Nigerian Institute of Chartered Arbitrators. Dr. Elobinso, please, over to you.
Good morning, everyone. We're happy to have you here. So welcome once again. Today, we'll start this webinar by first introducing the members of the panel. The speaker, there are two speakers. So the first one is Mr. Oyeyemi Oke. He is a partner at AO2 Law, a leading energy and tax expert. So we are honored to have Mr. Oyeyemi Oke, who is a distinguished legal practitioner. He is a tax expert. He's also an expert in energy. He has extensive experience advising international energy companies, and he specializes in debt equity finance in the petroleum sector. He also has extensive experience in taxation, in corporate personal income tax, and generally in tax advisory. And he has been in practice for a long while now, and he has provided advice to national companies and companies in the petroleum industry. So he's quite dynamic. So he's quite knowledgeable with respect to tax and the tax regimes. So please join me to welcome Mr. Oyeyemi Oke. We are actually very pleased and honored to have him in this webinar. Mr. Oyeyemi Oke, please say hello to us before we go ahead and introduce the second person.
Thank you for having me, everyone, and good morning. And it's my hope that we're going to have useful conversations and deliberations on the subject matter this morning. Thank you.
Thank you. And joining us also is Mr. Gambo Haladu. So Mr. Gambo Haladu is a seasoned tax professional, a tax policy specialist. He is a manager at the Tax Audit Department of the Federal Inland Revenue Service, FIRS. And he brings to this webinar unmatched expertise in tax compliance, audit, and policy formulation. He was actively involved in the drafting of the Nigerian Tax Bill 2024, which is the focus of today's webinar. And he also has extensive experience in tax audit, compliance, and enforcement. He has multiple certifications and has received recognitions and awards for excellence in tax administration. So over the course of his career, he has worked very closely with policymakers to shape the Nigerian tax landscape. And in this webinar, he will provide us with first-hand insights on the objectives, the changes, and the compliance
We can hear you now.
Okay, you couldn't hear me before, so
Yeah.
my apologies.
No problem. Like you rightly introduced me, my name is Gambo Haladu, a tax manager with the Federal Inland Revenue Service. Although I am joining you in this discussion this morning in my personal capacity as all the opinion I'll be sharing are those of myself and not of my employer. So please, I want us to take note of that. Please to be part of this business forum. Kudos to the Nigerian Bar Association for coming up with this initiative at this time, as the Nigerian tax bill represents one of the very topical issues in the business landscape of Nigeria. So I'm pleased to join you this morning.
Thank you, Mr. Haladu. So today, this webinar, the aim of this webinar is to provide insight on the Nigerian tax bill, which was recently brought before the National Assembly. It's still not been passed. It's still before the National Assembly, that is why it's a bill. But before its passing, we can see that it's brought a lot of controversy. It's actually revolutionary. It has a lot of reforms that it promises to bring. So that is the reason why we are having this discussion, to be able to get the insight of these experts so that business, in-house legal counsel, legal secretaries, company secretaries, and everyone in the business space, in the business sector, would be ready for when it's passed, so that there would be no fiction with respect to compliance, and to get us make it difficult for us to be able to comply. So we would start first of all by asking an overview, because we need to be able to understand what this bill is about. So Mr. Haladu, can you give us a brief overview of the Nigerian Tax Bill 2024? Very brief, please.
The Nigerian Tax Bill 2024 is a holistic reform to the Nigerian tax laws, and it's actually a component of the entire tax reform bill, which has other aspects of it, like the Nigerian Tax Administration Bill, the Nigerian Revenue Service Bill, and the Nigerian Revenue Board Bill. But since our focus is on the aspect of the Nigerian tax bill, which is, like I said, a holistic reform of the Nigerian tax laws, which I think happens to be the first time ever in the history of Nigeria that we will have such kind of holistic reform of all our tax laws. Now, before the proposed tax bill, you would agree with me that if you are in the sphere of tax administration, whether as a regulator or as a practitioner, you understand that some of the challenges we have is even the complexity of our laws. And I'll give you an instance with the Stamp Duties Act, which happens to be one of the oldest tax laws in Nigeria. The Stamp Duties Act was promulgated in 1939, and ever since, there hasn't been any major reform to it. The Companies Income Tax Act, the Value Added Tax Act, all are laws, that's on ground before even the return of democracy in 1999. So part of the challenges we've actually faced is how complex those laws are, and that has gone against the principle of taxation itself. Because as a student of economics, I know very well that there are some canons of taxation which it's like a global best practice. The tax laws are supposed to be simple, to be understood. They are supposed to be compact. So before now, what we have is various tax laws: the personal income tax on its own, the company's income tax, the value added tax act, the capital gains tax act, and all of that. So the Nigerian tax bill is supposed to harmonize all of these tax law into a single tax document, and also making it as simple as possible and fine-tuning it to be in line with international best practice of tax administration. So that's basically what the Nigerian Tax Bill 2024 is about.
Okay, thank you very much, Mr. Gambo. Can we have Mr. Oyeyemi, please? Can you also help provide us with what you understand from your perspective? What's the major changes that this tax bill promises to provide when it becomes a law? What are the major changes?
Okay, so as Mr. Haladu has mentioned, this piece of legislation seeks to unify, right? It seeks to unify the various legislations that we have as of today. As of now, you have corporate income taxes, capital gains taxes, value-added taxes, stamp duties, all scattered in various pieces of legislation. But the aim of this bill is to unify all of these legislations into one. And in as much as we're speaking on the tax bill, I usually look at all of these, I look at this holistically from a reform perspective, right? As Mr. Gambo has said, the tax bill is just a component of 4 other bills that altogether make up the Nigerian tax reform bills. And it is interesting to note that there is an interplay between the tax bill and the other bills, such as the Nigerian Revenue Service Bill, the Joint Revenue Board Bill, and the other bills. In terms of what I would say, what are the significant changes, right? One of the things we should know, as I mentioned before, is that this bill unifies about, I think, 10 various bills or 10 various laws into one. Now, we will now see what we call recategorization or redefinition of what a small company is. As at now, the threshold for a small company is a company that has 25 million naira turnover or lower, right? We would see a situation whereby the definition of a small company would go to a revenue base of 50 million, right? And total fixed asset of less than 100 million. Now, in terms of significant changes, right? The tax rate will change. Effectively, depending on how we want to look at it, we can say effectively the tax rate at the corporate level is about 33%. When we look at the corporate taxes at 30% and tertiary education tax at 3%, also depending on where you fall, you can actually be lower than 30%, depending on the nature of your business and depending on the size of your business. But we would see reduction in tax rates, right? It will go to as low as 25% from the 2026 year of assessment. And again, I'll issue a caveat, just as Mr. Haladu has mentioned before now. The analysis or whatever that is being said now is subject to what will be the outcome of the law once it's enacted, because I have a feeling that some of these aspects will change. Provisions regarding minimum effective tax rate has been introduced. Generally, there will be no minimum tax, however, subject to certain circumstances whereby the minimum effective tax rate would be at 15%. We will see instances where tertiary education tax will be scrapped and replaced by what we call development levy at various rates, 4% for 2025 to 2026, 3% 2027 to 2029 years of assessment, and 2% on a going forward basis. So there are quite a number of holistic changes. If we sit to discuss the tax bill, as you may imagine, it's a document of 237 pages, which if we sit to discuss it, I think we would have to hold a master class all week long to discuss the bill. But these are some of the what I would call highlights. Also, I think another interesting highlight for this group or for this audience is that the personal income tax rates will change. And we would see a situation whereby at the base, people who are regarded as low income earners would be paying zero taxes, provided that their tax, their income is not more than 800,000 naira on an annual basis. And you see a situation whereby the tax rate continues to grow progressively until about 25% for people who are earning above 50 million naira. And you would see a quick analysis of this shows that actually the tax rate will continue to be favorable, right, on the personal income tax level, up until perhaps when you start earning above 180 million, whereby you will see significant increase in your taxes in terms of what you will be paying. But I mean, I think I would stop at this. I guess once as the conversations progresses, we'll be able to shed more light on other things. Thank you.
Thank you for that deep overview. Thank you for helping us with that. But as Mr. Oyeyemi said, the tax landscape is getting reformed in a very major and significant way. The company's income tax, the value-added tax, personal income tax, withholding tax too, right? These are the taxes, right, the main taxes that are actually getting the most of the reports. And since our focus is on business sector, I would like Mr. Gambo to help us explain what businesses should expect, from this new bill. What do you think the impact would be on businesses? Because you can see that the changes are gradual. It's not instant. So when this bill is passed to law, businesses are going to be significantly impacted, not immediately, right? But in a very graduated manner. So what do you think the impact will be on businesses, and what do you think they should look out for? Mr. Gambo, please.
All right. Okay. Can you hear me? All right. Okay. Thank you very much for having me back. So the tax reform bill, generally, I would say, if you look at it from the beginning to the end of it and all the areas it seeks to amend, to say honestly, is that quite about everything in there is to favor emerging taxpayers, particularly SMEs. The presidential tax policy and the Presidential Fiscal Policy and Tax Reform Committee have already mentioned it earlier, that the essence of the tax reform is to have a system where you don't tax the seed, but you tax the fruit. So, and I think everything that is proposed in that bill is in tandem with that principle. So everything will support the emerging businesses until when they become prosperous to a point where they fall into a proper category of being taxed accordingly. So in the whole of it, I personally feel that all the areas of amendments, from the personal income tax to even increasing the threshold for a small taxpayer. Now, for companies with turnover of less than 50 million in the proposed tax bill, those companies are expected to pay 0% tax. So the focus is even more on the big taxpayers that probably have not been paying commensurate taxes to what they earn. But before now, what we have is a situation where the taxpayers on the lower side of turnover are usually the ones that bear the brunt of tax payments, and that too violates even the principle of economy as far as taxation is concerned. When there's part of the responsibility of government to encourage those businesses to try first, before you begin to tax them. So if before now all companies, small companies are being taxed, you realize that there is an impact which usually stunts and delays their growth. So it's a welcome idea that this tax reform bill is intentional about supporting small businesses. And it's quite interesting too that at the same time, certain reforms are happening at the FIRS. The focus of this administration, the policy of my chairman is majorly on three cardinal objectives of focusing on people, focusing on technology, and also focusing on processes. So taxpayers should be able to have a different experience, a breath of fresh air this time around, because technology will be used so much in their examination, so that without any form of discomfort, the tax authority can be in the office, and be able to check who is non-compliant, who is compliant. The ones that don't fall under the bracket can actually be allowed to go on with their business, and then continue to thrive, continue to grow until when they reach that maturity level to also contribute to the revenue part. So looking at all the proposed changes, personal income tax below certain threshold, if you earn below the minimum wage, of course you don't suffer the personal income tax. Company income tax too, below a certain threshold, you don't suffer any taxes. So I think it's quite an exciting development for businesses, like I said earlier, particularly emerging businesses, and then the small taxpayers, that's the SMEs. So for the legal advisors, which I see as a crucial and critical stakeholders in tax administration, one thing I would advise is, compliance. Voluntary compliance is like the hack for any business and for any company engaged in the business. Most of the issues you have with, so like the audit function where I work, most of the issues you see at audit are usually issues of infractions. When you are supposed to file, you don't file as and when due, and then it becomes an issue that you have to be penalized, and then interest being accrued for you to settle and all of that. So I would advise and also encourage the business leaders and the legal advisors to try and understand what these reforms are, and make voluntary compliance a conscious activity for them, and that will go a long way to help their clients and then also help their businesses.
Thank you very much for that. So Mr. Yemi, okay, and Mr. Haladu, they've stated that there has been a focus, a shift of, from small and medium enterprises to the large ones. So we find that the new bill actually now makes, two categorizations of businesses. Initially, the small and medium enterprises were the ones that bore the most burden, the most of the tax burdens. But now what this reform is aiming to do is to shift that burden from the small ones to the big ones. So I believe, so now, Mr. Okay, do you think that it makes compliance easier for small and medium enterprises and makes it more difficult for the large ones? Or is it a win-win for all sizes of business?
I think I may
Mr.
have,
Oyeyemi,
I may have missed the question. I think I had an internet glitch. You said it's a win-win for businesses.
Yes, I was asking that this new categorization, this new focus from the small and medium enterprises to the large ones now, is it a win-win for both small and medium enterprises and the large ones? You know, or is it that the large ones should just be scared of this reform?
So I think the way we should look at this is from the angle of what is the mainstay of any economy, right? World over, the mainstay of the economy is typically the SMEs, right? And if you have a legislation that is encouraging SMEs, then I think what that means is that you are creating what I would call an economic environment for those SMEs to tide over into bigger corporations. Now, do bigger corporations need to be scared? I don't think so. And why I don't think so is that a deep dive into the provisions of the bill, you would see that there is quite a lot of a number of incentives that can be taken, right, by the bigger companies. And do not forget that the tax rates, based on what I mentioned in my opening remarks, right, the tax rates would also go down over time up until to as low as 25%, even for the bigger companies, which means that if you look at that, there is approximately about a 5% savings based on if you compare it to what is currently being paid as taxes as of today. So I don't think bigger companies also have any need to fear because, like I said, there's quite a number of incentives that can be taken. In my view, I think the legislation in itself is actually, I would say, market-driven and business supportive, right? I think what the import of this legislation will be is that ultimately we would see more taxpayers into the dragnets, which would make the tax base deeper, most likely, or that's the potential. And perhaps more people will be subject to taxes, more people used loosely here, whether individual or corporates, and it would help the revenue authorities to build its tax base. I mean, all in all, I think it's a business-driven legislation which would engender businesses both at the small SME level and also at the bigger level. But a quick point to note is that I guess the area of concern for me will be in the area of the VAT rates, right? And we would see a situation whereby there's a proposition that the VAT rates would increase, right? And it would increase gradually over the next, I think over the next 5 years from 10% or 7.5% that we have as at now to 10%. And perhaps in 2029, subject to when the bill passes, it goes to as high as 12.5% and ultimately 15% by 2030. So what this means is that there's a likelihood that you would have a situation where consumer tax goes up, right? And the question is, how will this work vis-a-vis perhaps the inflation which we're dealing with as a country as of today? I guess that for me is also food for thought, perhaps on the legislative side as to whether those proposed rates also reflect or would affect the reality of the earning power of you and I as Nigerians.
Okay, thank you for that. Before we get to VAT, I would like us to, lay some serious foundation, especially with respect to companies and income tax. We'll get to VAT, we'll get to personal income tax. So with respect to companies and income tax, Mr. Oyeyemi has let us know that even the small business, even the big businesses, the large businesses should not be so worried because the tax rates are generally going to get lesser. So, because before, businesses had multiple taxation. Before, businesses would pay for NIDA, they would pay for TED fund, and they would pay for almost literally any development. We usually have taxes for those developments. So what this reform bill is trying to do is to consolidate all the payments into one. And so generally, even the large businesses are going to find themselves hopefully paying lesser capital income tax. Mr. Halaju, do you have anything to add to this with respect to companies' income tax?
Please switch it on.
Okay. All right. Thank you. Well, so now with respect to the company's income tax, so taking from the question you asked earlier about if it's a win-win, I think I would say it's a great win-win for both the big businesses and the large businesses, and virtually for everyone that is involved in the tax value chain, being that the laws now are going to be made simpler, meaning that for both the practitioners and the administrators, the understanding would be easier, and there is this syndrome from experience that I've realized, when taxpayers speak of double taxation now, which is different from multiple taxes. So we had the challenge of multiplicity of taxes where you pay CIT. Now, within the family of the company's income tax, you pay the income tax, you pay the education tax, you pay the NIDEF, you pay, the Nigerian Police Trust Fund, and all of that. So that has been a challenge with respect to compliance for most taxpayers, because a lot of them are not even aware of some of this legislation because they exist separately. So now if we have them consolidated, it actually makes it very easy for businesses to comply. And once businesses can comply, then it saves them some certain kind of cost, especially the cost that usually comes with non-compliant. So I think it's a fantastic one, and in all, everything is going to make it easy for virtually everyone that has one or two things within the value chain of tax administration.
Okay, thank you very much for that. So what would you advise, how would you advise company secretaries and legal advisors on how to prepare with respect to payment or compliance of with respect to company's income tax, compliance with the company's income tax when the bill has been passed? How can they prepare for these changes?
All right. So what I would advise companies and their legal advisors or their secretaries to do is to understand the provisions as quickly as the bill becomes an act. So understanding that, like we have repeated, is going to be easier than what we used to have before. Now it might just be a compendium of all the, so it becomes an immediate responsibility for them to understand the changes, to also take critical note of the effective date of implementation, and then try to make timely compliance in terms of their returns. So now, for instance, when we talk about how certain businesses within a threshold attract a 0% tax rate, that does not mean that such company is exempt from paying tax. It only means that such company pay 0% tax, which of course will eventually translate to paying nothing, but that does not take away the responsibility for the company to register and then file their returns as at when due. So part of the issues that companies will always face is when they mistaken this development of some of them attracting 0% tax rate and to think that that exempts them. So they should take caution and also try to make very timely returns. All the different tax obligations have their due date. The VAT has its due date, the company's income tax and all of that. So I will encourage them to get acquainted with those responsibilities and try to make timely filing of their tax returns, whether or not they are going to pay any tax at the end of the day, you know. So basically, that is one of the strong points for them to focus on.
Thank you very much, Mr. Haladu. So, Mr. Oyemi, what is also your take with respect to how businesses should prepare to comply with companies' income tax, the reforms when they become the act? How do you think that companies should get ready? What should they do to be able to get ready for compliance with respect to CIT when the bill becomes a law? Mr. Okay, please unmute yourself. Okay, while we wait for Mr. Okay, maybe we should move on to VAT. So, Mr. Haladu, when we talk about VAT, there are some significant reforms that are being proposed. As Mr. Oke said earlier, is with respect to the rates, right? Can you throw more light on the changes, the key changes that are proposed to be made to the VAT? Mr. Haladu, please.
Yeah, okay. All right, so if you can hear me now.
We can hear you, go ahead.
Okay, all right, great. So basically with respect to the VAT, I think it's the only aspect of the reform which proposes a higher rate, whereas for income tax and other taxes, you will notice that the reform is proposing a downward review of their rates, but the VAT is the one that has a proposed increment, even though it's not going to be instant. I think we expect to see an increase to 10% and eventually 12.5% by year 2030. So that too may appear well, maybe something that will not be favorable to businesses, but I think we should also look at the fact that when you talk about VAT, Nigeria not only has one of the lowest VAT rates in Africa, but almost in the world. VAT is a consumption tax that has proven to be an effective tool, that is used by government either to control consumption or to make revenue from consumption. And for Nigeria to be a global player and still lag behind in the area of VAT administration, I would say personally, I think the proposed amendment is still in line, to put Nigeria too on the same pedestal with the other global players in terms of VAT administration.
Okay, thank you for that. Mr. Okay, are you back with us now?
Yes, I'm back. My internet was uncooperative at that moment.
Okay, so we're rounding up with the CIT, the corporate income tax, and what do you think is the rationale behind the development levy, and how do you think that companies should prepare for compliance with respect to the company income tax?
Okay, so what's the rationale for development levy? At the point when we started the conversation, one of the things that was that I mentioned was that it appears that one of the approaches that wants to be taken is that we should have what I call some type of unification, right? Whether in unification in administration, unification in laws, or perhaps unification in taxes. Now, as of today, let me pick a financial services company, right? As of today, financial services company will pay company income tax, will pay tertiary education tax, will pay contributions to NITDA, which we call the NITDA levy, will pay the NASENI levy, right? What you see is multiplicity of taxes at various levels, right? What has been done, or what the bill seeks to do by the introduction of the development levy, to my mind, is that there's going to be some type of consolidation, right? Consolidation of all those various taxes into one, right? Such that there's ease of administration, and also there is some type of clarity with regards to the type of taxes to be paid. Now, another good thing about the introduction of development levy, again, is that it progressively decreases based on the provisions of the bill, right? Upon enactment, the initial development levy will be 4%, right? And between 2027 to 2029, it goes down to 3%. And ultimately from 2030, it goes down to 2%. So apart from the issue of unification and consolidation and ease of administration, you are also seeing what we call a progressively decreasing levy system, which is good. So to my mind, I think the concept of development levy, it's a good one for the purpose of clarity and ease of administration. That said, and I must say this emphatically, is that certain organizations such as the Nigerian Tertiary Education Trust Fund, right, their existence becomes or is in jeopardy as of today, because, for example, the Tertiary Education Trust Fund, right, is wholly funded by the contributions, the 3% on accessible profit that is contributed by companies. What this means is that by 2030, right, when allocation of development levy to the trust fund becomes zero, there's a big question as to what is going to be the future of the Tertiary Education Trust Fund. Now, if we do some type of appraisal over the years, right, perhaps since the 90s when the trust fund was introduced, we would have seen how impactful the trust fund has been to Nigerian tertiary institutions, whether university, colleges of education, and what have you. Now, the question is, if the funding runs dry at that level, I hope there is sufficient program to be able to block that gap. Now, going to the compliance point, which you made mention of, with regards to what should be done, perhaps from a legal practitioner's perspective, either to your clients internally, or if you're acting as external clients, external counsel rather, I think what should be done is that we should start looking at the areas which the bill would affect our clients from a compliance perspective, as Mr. Gambo has said. we should start putting together programs to be able to assist the taxpayer or our clients with regards to the transition from the current administrative regime to the next administrative regime. Most likely there will be some type of transitional period, but that may not be so long. So the best time to start providing advice and support is now. And also, we need to start speaking to the various, either the finance team, tax team of our clients, and also legal with regards to starting what I will call a transition program into the new tax regime.
Thank you for that, Mr. Okay. Thank you for that. So let's now go to the VAT. Like Mr. Oke mentioned, you know, there is, and also Mr. Haladu, he also mentioned that, you know, that the tax rates, the VAT rates are going to change as we go. It's going to be graduated as we go from 7.5% up to 15%, 10%, 15%, around 2030. But then the tax reform committee chairman has in many occasions stated that, you know, there are benefits with respect to exemptions, especially exemptions on essential goods. So can Mr. Yomieke, can you help us throw more light on what these VAT exemptions on essential goods really are, and how businesses can, you know, so that to help them understand exactly what it is and whether their business would be able to, would need to change or to change their strategy on VAT.
Okay, so the, I mean, as of now, we have VAT or categories of goods and services that are exempt, right, from VAT. And there are two categories, or let me say, with regards to categories of items that will not pay some type of VAT or the other. You know, there is the category of zero rated and also those that are totally exempt. Zero rated is just saying that the VAT, applicable VAT rate is zero, not that they are totally exempt from VAT. Now, the bill, right, has granted total exemptions to certain categories of goods and services, right? And some of those goods and services would include things around baby products, locally manufactured sanitary towels, things around exports, right? Also goods provided, goods purchased for humanitarian and donor-funded projects. But I think most of the benefits under the bill are actually with regards to what you call perhaps what you have mentioned as basic food items. Most of them are actually zero rated, not totally exempt. So what that means is that VAT applies is just at 0%. And under the section 146 of the Nigerian tax bill, you would have a situation where basic food items will be zero rated. And the question is, what are basic food items? Things around locally produced agricultural products, right? Animal feed and things like that. Fertilizers are basic items that are not going to be subject to VAT, right? Things around exported services, medical equipment rather, and exported services are going to be zero rated as well. So my view is that some of the items which are as at today, what I will call totally, have been categorized as totally exempt, right? Have now been moved to zero rated products. So what it means is that they are not totally exempt in the real sense of it. It's just that the applicable VAT rate is zero. So what it means is that in the event that perhaps government wants to raise revenue or government wants to implement any type of other fiscal policy, they can just apply VAT rates to the so-called zero-rated products. So for me, in as much as VAT rates would increase, and undeniably so, Nigeria as of today has one of the lowest VAT rates in the world. So raising VAT rates perhaps aligns with what is called, what is regarded as global practices in terms of what the tax rate should be. But beyond that, my view is that as we are increasing the VAT rates, we should also not look at increase of VAT rates in isolation with regards to what is happening in our local economy, whereby as at today, inflation continues to peak and the purchasing power of individuals continue to reduce. The question would just be, is this a good time to increase our VAT rates? What it means is that we would also still have perhaps increase in price of goods and services, because VAT in itself is a consumer tax, and you and I would have to pay ultimately for it.
Thank you for that, Mr. Yemioke. Mr. Haladu, can you help us throw light on these VAT exemptions? Mr. Yemioke has already informed us of those places or those exemptions, those industries or things that fall, services too, that fall under the essential goods, that fall under the VAT exemptions. For instance, essential goods, educational services, agricultural, healthcare, finance, transportation. Can you help us throw more light on these exempted goods and products? Mr. Haladu, please unmute yourself.
Okay, all right. Okay, thank you. Well, so basically, if you look at the issue of VAT, like Mr. Oyeyemi has rightly said, so of course there is this concern about it, being increased. So on the surface, we talk about the VAT rate being progressed upward, which we have also said that, well, so it's in line with global best practice, because Nigeria as of now has the lowest VAT in Africa, and the implication of that is, we're always at the short end of the stick when it comes to double taxation agreements with other countries. So it's almost a requirement that Nigeria levels up with other countries, when it comes to issue of VAT. So that being said about the aspect of the rate, you would also see that in the proposed amendment, there is a conscious thinking to create some kind of succor for certain sectors of the economy, and that brings us to the area of exemptions. The VAT modification order is something that has been constantly reviewed. So the VAT modification order gives you a detail of all the items that are exempt. So when we talk of basic food items, you begin to wonder what are basic food items. So, but the VAT modification order defines all the basic food items, which, if you look at, are mostly staple food that are being consumed by the poor. So, as much as we are concerned about the impact of the increased rate, we should also see that there is an adequate consideration of exempting such items. So items like healthcare, education, food, rent, and transportation, are items that are considered for exemption. So, and like I said, these are things that, the common man or the small businesses usually struggle with. So at that point, I think the exemption is quite commendable, because when you look at rent, which is a cost to most businesses, and if it's not exempted from VAT, you can imagine paying rent and then also paying an extra on it for as VAT, basic food items, healthcare, all these things are considered to be exempt items. And then another interesting development we probably have missed out in the discussion of the VAT amendment is the fact that it will lead to the continuance of other consumption taxes. So what we have now is probably a worse situation even for the consumers, because in most places, even as we say we have a VAT rate of 7.5%, you still have businesses too suffering other forms of consumption taxes, or consumers suffering other forms of consumption taxes. So yes, you are dealing with VAT at 7.5%, but at the same time, you are also paying a consumption tax that is mostly around 5%. So I think this development is going to bring us clarity, is going to bring us simplicity, and is going to make the whole aspect of tax administration and compliance a little less obscure. So yes, so of course, so if we can, even if the VAT rate will increase, if we can immediately have a discontinuance of those other consumption taxes, I think it's still, a good achievement, or rather, it means we're actually moving in on the right direction. So there are a lot of exemptions for businesses, which I think, even with the increase in the rate, the impact might not be as much as we anticipate or we fear.
Yes, thank you for that very insightful point. If I may ask, right, the issue between VAT and sales tax, does this bill settle that issue with respect to VAT and sales tax, especially for companies in the hospitality industry?
Yes, absolutely. Absolutely. So the amendment in the VAT has proposed to address this issue of consumption tax, like we said, that is mostly charged by the hospitality and yes, so the hospitality industry and even other businesses. So if you look through the proposed amendment, you will see that the VAT is supposed to become the only consumption tax that will be suffered by consumers.
Thank you for that. So please, if I may announce now to the attendees, if you have questions, I'm sure you have questions. If you have questions, please share them, send them to the chat so that we can start collating them and get them ready for Q&A. Okay. Now, with respect to the personal income tax, the personal income tax is another type of tax that is also getting major reforms. Okay. Can Mr. Oyeyemi Oke, can you help us shed light on the significant reforms that are coming with respect to the personal income tax?
Okay. So I think the significant reforms that are coming under the personal income tax is the first thing will be the tax rate, right? Currently, we have a graduated tax table, right? That taxes income right, on a graduated basis between 7% to 24%, depending on where the bracket which you fall into. And this will change upon enactment, right, whereby you would have a new tax rate, right, and the tax rate begins from 0, right? If you earn less than 800,000 naira annually, you won't be taxed, right? From 0 up until 25%. And one of the analysis that we've done is that for the low income earners, there will be 0 taxes, as we have mentioned. For the mid-level income earners, actually based on the analysis that we have done, right, we have actually seen some type of, or there will be some type of tax savings, minor changes in their taxes, which means that net pay will go up, right? And the impact of the increased tax rates at the higher level would affect the higher income earners. And interestingly, again, we did a simulation and we found out that the threshold which will be affected perhaps is about at about 180, 190 million annually above. So if you earn within that tax bracket, then you'll be paying more taxes. So which means that you would have a progressive tax regime, which is what is applicable as of now. But now the high income earners will feel it more, right? Which ordinarily should be the case because they are the ones that are earning more. So what this means is that the middle class perhaps will have a bit of more money in their pocket based on what the tax regime or the personal income tax reforms will be. But I think instructively, one of the things I should point out is that all of the eligible deductions under the current regime, things like contributions to NHF, pension contributions, and life insurance premium, all of that are still retained under the tax bill. But one of the things that has changed, or that will change, is that the consolidated relief allowance of 200,000 plus 20% of your earned income has been scrapped, right? And what you have now is something called, I think, the rent relief allowance, right? Which means that you are going to get the lower of 200,000 or 20% of your annual rental expense, whichever is lower, and that is subject to you being able to provide your rental agreement. So that change in itself is quite significant, and we will see a situation whereby most taxpayers will now have to rely on the rent relief allowance. So that's a summary of how the tax bill would affect personal income tax. From an employer perspective, what this means is that tax computations need to change or will change, right? And when tax computations change, what it means is that the employer needs to remit the right payee taxes to the relevant tax authority of the state in which the relevant employee resides in. But all in all, the tax rates seem to favor lower income to mid-income earners and is a bit steep on the higher income earners.
Okay, thank you. Thank you very much, Mr. Oyemioke. Mr. Haladu, can you share your perspective on the impact of the reform bill, on personal income tax? And how should businesses prepare for compliance?
All right, thank you. So I think Mr. Oyemi has actually expanded much on the issue of the proposed amendment with respect to personal income tax. Well, so I would say the proposed amendment is consciously made to reflect a progressive nature. Interesting analysis they did to even identify the impact it has on lower income earners, middle income earners, and high income earners. So unexpectedly, a progressive tax system puts lower or lesser burden on lower income earners, and then progresses further to putting higher burden to higher income taxpayers. So, and in this case, I think that's what the proposed bill intends to achieve with respect to personal income tax. People below a certain level of income would have nothing to pay. If you earn less than the minimum wage, you pay 0% personal income tax, and the rate keeps progressing until it gets to a maximum level for people that earn in hundreds of millions. So I think it's a good development for businesses. And the only thing too, like I'll keep emphasizing, is aspect of timely compliance. The most crucial thing at this point is to make the relevant changes accordingly, and also strive to make timely returns, because most businesses suffer a lot more due to non-compliance than even what the tax burden ordinarily should be. We've seen instances where we deal with small taxpayers that don't even make significant income in a particular month, but because they fail to file their VAT returns, for instance, and you see them paying late returns penalty and then paying a lot of that. So I would encourage businesses to understand these obligations and also make timely compliance. That will save them a lot of inconveniences, and even preventable interest and penalty for infractions.
Thank you for that, Mr. Haladu. So now that we have spoken about the VAT, there are other changes. For instance, the withholding tax. There are changes that are made to the withholding tax. So what are those changes? Can you tell us what those changes are? And if possible, the rationale behind the changes with respect to withholding tax.
Okay, so the withholding tax regulation has already been passed. It's part of the broader tax reform, but that was treated differently, and it has been gazetted and has taken effect. And basically what you notice with respect to the withholding tax regulation is that most of the tax rates have been reviewed downward. So that too is a good one for businesses. When you have to pay lower withholding tax, what that means is you have an improved cash flow. So most businesses going forward will have more cash at their disposal to run their day-to-day business, rather than having to pay an amount as withholding tax that eventually would lead to the tax refund claims and all of that. The process too that takes a long time to go through. So I think the new withholding tax regulation would take less from most businesses, and as it takes less, it gives them an improved cash flow. So basically, that too, I think it's a good one also for SMEs and the taxpayers in general, you know. And
Thank you
even
very much, Mr.
as administrators too, yes.
Yes, thank you. That was insightful. So, Mr. Oyeyemi, with respect to the withholding tax, right? What is your perspective?
Well, I mean, I think Mr. Gambo has said a lot in terms of what is the situation on withholding tax. As of today, we already have a regulation, right, which was effective or became effective in January, right? I mean, I think let me touch more on the cash flow point, which Mr. Gambo talked about, and perhaps maybe because he says he's speaking in his personal capacity, but I know he works with FRS. Let me tell you some of the challenges taxpayers have with withholding tax credits, right? Which I think perhaps this regulation would solve. Now, what happens is that you have a situation where I have huge withholding tax credits with the revenue authorities, and I continue to use it to offset my future taxes over time. But the huge withholding tax credits, I don't get any type of interest on it. The FRS doesn't pay me interest. They're using my money as a taxpayer, right? And that has always been a concern for taxpayers, because what it means is that they have monies which are tied up in credit and they cannot use for their businesses. And unfortunately, I think the double jeopardy in that is that they cannot also not get some type of ROI, if you ask me. So the decision to have a new withholding tax regime in terms of reduced rates would free up cash flows, as Mr. Gambo has said, and it will enable businesses to be able to deploy their funds into other parts of their businesses or operations to be able to expand their operations so that more taxes would eventually be paid. So I think the regulations is just, I would say is treating the problem businesses have with regards to cash flow. Now, if we speak from a legal perspective, the question would be, what happens when the bill is passed? Now, depending on what the transition or repeal or savings provisions are under the bill, right? Perhaps there may be no need for the Minister of Finance to reintroduce a withholding tax regulation just so as to comply with the fact that there's a new regulation made pursuant to the reforms law, because the Nigerian Tax Administration Bill envisages that withholding tax shall be in accordance with regulations. Then the question is, which regulations or what regulations are we going to use? Will it be the regulations that predates the enactment of the bills, right? Again, like I said, the devil will be in the detail of what the transition and savings provisions of the bills say. If the transition and savings provisions actually save the current regulation that we have, then there will be no need for any type of reintroduction or reenactment, quote and unquote, by the Minister of Finance of the withholding tax regulations. However, if it's not saved, I guess administratively, the Minister of Finance would have to just introduce new regulations. The new regulations may not necessarily be different from what is operational now, but just to ensure that there is some type of coherence and consistency in terms of sequence of lawmaking. But all in all, I think the withholding tax regulations are also quite business friendly, and they tend to address the cash flow concerns of taxpayers.
Thank you. Thank you for that insightful one. Mr. Haladu, Mr. Oyeyemi called it out with respect to your with respect to you saying you're not here representing your work, and that's fine. Do you have any response to that, or should we just go ahead with the next question?
Well, so anyway, so on that caveat, it's we're discussing a proposed bill, remember, so it's not an act yet, and not even the FIRS would want to discuss so much on something that is still before the National Assembly. But as soon as the bill becomes an act, I am sure the relevant departments of the FIRS, the Taxpayer Service Department, the Tax Policy Department will now take ownership of these provisions and begin to have provisions on it. Yeah, so but good enough, you concur to the fact that the withholding tax regulation has made very good provisions that will support business. The issue of cash flow for business is a serious matter, and like you also really concerned about the amount of and without any interest. So I didn't want
I don't know if it's my network, but you're really cracking up. You are cracking up. Okay. Okay. Thank you, Mr. Haladu. There is a question in the chat, so maybe we'll take the question before we close, because we're quickly getting to the conclusion of this very insightful webinar. So the question is for Mr. Haladu. It says that the law provides for the Tax Appeal Tribunal and the Office of an Ombudsman. This seems to be a very similar function. Does one come before the other? Mr. Haladu. Okay, so I think Mr. Haladu is having technical issues. Mr. Ayamioke, do you have a take on this with respect to the Ombudsman and the tribunal, the TAT?
Okay, so the role of the Ombudsman is different, is quite different from the TAT, right? And if you look at, I think that should be either in the tax board bill or in the revenue, I think the revenue, administration bill rather. Now, if you look at the role of the ombudsman is just supposed to be some type of arbiter or mediator with regards to tax administration process, right? Essentially, what this means is that let's assume that I have an assessment raised on me, and for whatever reason, the assessment was raised and I wasn't allowed as a taxpayer to object. And what I have is perhaps the issuance of notice of notice of refusal to amend assessment, or they even go to what I call the enforcement stage, right? What the role of the ombudsman is supposed to be is that you can complain to the ombudsman with regards to the process and procedure with regards to assessment and up until perhaps enforcement. Now, if you look at the tax administration bill, there are actually specific things that the ombudsman cannot do, right? You cannot actually go or delve into the nitty-gritty of the assessment, the nitty-gritty of the tax issue, right? And obviously, when matters go to the TAT, you are not, you cannot deal with it. So what the role of the ombudsman is, to my mind, is just some type of complaint authority, whereby you can complain to, but the complaint is also limited. It has to do with administrative procedures with regards to tax administration. and doesn't go into dealing with substantive issues on the TAT or adjudicating on matters. Now, in terms of the sequence will be perhaps if a revenue authority has behaved in a certain way which you do not like administratively, you can go to the ombudsman to complain before you ultimately go to the TAT. Now, it doesn't mean that you cannot go to the TAT directly. Under the administrative bill, you can actually go to you can appeal the decision, right, of a revenue authority straight to the TAT. And the question is, I mean, I think we've seen various cases that has determined what a decision would be. A decision would be any type of action taken by a relevant tax authority. So in terms of sequence, it has to be the ombudsman before you go to the TAT, but it doesn't mean that you cannot actually skip that process. Now, in terms of intellectual discourse and intellectual argument, some people have said that the role of the ombudsman is just a dog that can bark but cannot bite, right? Because of the limited role of the ombudsman under the administrative bill. But it's a new introduction. Let us see how implementation will work, right? If it's part of the bill, I mean, an act eventually. But in terms of sequence, it has to be ombudsman before TAT.
Okay, thank you for that. Thank you for that very insightful take. Mr. Haladu, are you back with us now? Mr. Haladu. Okay, so it appears that Mr. Haladu is still having technical issues, but we need to bring this to a close. And it's been quite insightful. So, Mr. Oyeyemi, if I may ask, what are the tips that you might give legal professionals with respect to compliance with this new bill, when it becomes law? What tip would you give them?
Okay, in terms of tips, I think one thing one thing we should all know is that there will be a lot of work, compliance work, right? Both for tax practitioners and legal practitioners, right? I think this is a good time to take a position in terms of being able to position yourself to be able to provide sustainable solutions and sustainable advice and support to your clients. Would there be disputes, right? And again, I think we should, I think it's necessary for me to emphasize that in terms of the gamut or scope of work that is available to be done on with regards to the bill, right? It ranges from pure compliance to advisory and perhaps ultimately dispute. So it depends on which of the spectrum of the tax value chain you sit or you want to sit. Some sits in all, right? Depending on where you want to sit. There would always be, or there will be flurry of work within the next 2 to 5 years in the event that the bill is passed, right? Would there be disputes? I can assure you that there will be disputes because a bill, right? A bill that is as big as 237 pages, obviously there will be areas to interpret, which perhaps the taxpayers may take a different approach from what the revenue authorities would take. So that is also a potential line of income or stream of income for legal practitioners as well. So all in all, let's take our position: advisory, compliance, or disputes, depending on where we want to play.
Thank you very much. Thank you. We appreciate your expertise and your, making it simple because it's quite a complex terrain. It's quite a complex regime. But our experts, our expert panelists,
compliance.
have been able to. Our expert panelists, Mr. Haladu, you're back. We missed you.
Yes, I'm back. Sorry about a technical glitch we suffered here. So I've been able to connect on mobile now. So I think I should be fine to the end of the session.
Okay, so we're rounding up now. So there was a question from the chat. With respect to, it was actually directed to you. With respect to, the role.
They recorded it, so they will send it.
Are you
And I
there?
had in mind of
Yes, I can hear you.
Okay, so there was a question that was directed to you, but Mr. Yemioke has done a very good job at explaining it. But I wanted to find out if you have, a different take or something to add to it. The question was with respect to the role of the Tax Appeal Tribunal and that of the Tax Ombudsman. Is there going to be a
let me
clash? Is it
check
the same
this
thing?
for
Are they
you.
going to be doing the same thing? Or is there going to be, are their functions similar?
Oh, okay. Well, so thank you for that question. Even though I'm sure Ms. AME must have done justice to the question. So, but to add to it, I feel well, so there won't be any overlapping to the best of my understanding. The tax ombudsman is basically like an arbiter, somebody that is there to try to mediate, so to say, before the matter gets to the tax appeal tribunal. And the tax appeal tribunal has a status very similar to a court. So when matters go to tax appeal tribunal, it becomes like a serious legal issue. But my understanding of the role the ombudsman will be playing is that of a mediator, so to say, somebody that not like a dispute resolution. So if there is an issue between administrative issue between the taxpayer and the relevant tax authority, before now we don't have an ombudsman, and the tax authorities usually have the function to resolve issues like this. So it's like you are making them judges in their own case. So the ombudsman is supposed to be an independent middleman that would always try to mediate between the taxpayer and the relevant tax authorities before the matter gets to the tax appeal tribunal. So what this will do is we'll see less incidences of issues going to the tax appeal tribunal, because in any instance that the tax ombudsman can resolve such disputes, then it saves both the regulator and even the practitioners a lot of trouble.
Okay, thank you for that. Then one last question for you. What tips would you give legal professionals with respect to compliance with the bill or with the law with the bill when it becomes a law?
All right. So my advice to legal practitioners who initially I have recognized as very key stakeholders in the business of tax administration. We know that tax administration is accounting in nature, but at the same time, when you talk about compliance are basically legal issues. So whether at the point of audit, at the point of investigation, what are being discussed are issues of provisions of the law and if there are infractions. So that brings us to the importance of what the law holds in the business of tax administration. And then legal practitioners have a very key role to play in that regard. So my advice would be for them to remain and stay abreast with the developments, and also continue to intellectually engage to know the potential impact some of these amendments can have on their clients, and try to also, comply with the timely implementation, or rather comply timely with the provisions of the law, because once it's passed and it becomes effective, immediate compliance is usually expected. So that would be my advice. They should remain abreast and also try to, do an evaluation of the potential
impacts, both positive and negative, of this proposed bill on their clients generally.
Thank you very much for that. Thank you. But then I would like to thank you to the experts. Thank you, for the insightful, making this an insightful session. But I would like to invite the co-chair, Mr. Muyiwa, to come on and give a closing remark.
Thank you very much, Doc. Learned Silks, colleagues, members of the academia, in-house council, as well as our speakers. We want to thank you today for joining us. I think this has been a very good journey. We thank you for participating. I was looking through the streak of attendee, and I found that people were logged on to this webinar. Again, we hope you found this discussion quite informative. We hope you find it valuable. Very importantly, we are grateful to our speakers, Mr. Aladu, Mr. Oyeyemi. We know what the preparation towards a webinar of this nature would have taken out of your time, and we do not take that for granted at all. A special thank you to the branch leadership, more particularly the team, the technical team at the Secretariat as well, for supporting this platform, and for every other person that has made this possible. I want to thank the members of the Business Forum for your support, and most importantly, all of the plans and preparation towards this event. I would like to say that if we have questions or would like to continue this conversation, let us feel free to engage our social media handles at the Business Forum, on LinkedIn, on the other channels. And again, we would share some documents, perhaps at the end of the session as well, to our email addresses. Overall, we thank everyone for your patience, and do stay tuned for forthcoming events of the Business Forum of the Ikeja Bar. Thank you very much.
Thank you, everyone. Thank you. Thank you, the speakers. Thank you. And have a great day.
All right, thank you. Have a great day too.